At first glance, the market was a sea of red today. But the headline numbers, they rarely tell the whole story. So let's dig in and find out what was really going on behind the scenes in today's Explainer.
Okay, let's just jump right in. Wow, a sea of red across the board. I mean, the main Nifty 50 index, it dropped 288 points. That's a fall of 1.1%. And it wasn't just the big guys. The broader Nifty 500, the Bank Nifty, even the mid and small caps. Yeah, they all finished the day in the red. So yeah, on the surface, it looks like a pretty rough day for investors, right? But like I said, these big numbers at the top, they never give you the full picture. To really get what happened, we've got to peel back the layers and see what was moving underneath.
All right, first up, let's talk sectors. It's time for the sector showdown. Where was the strength and where was the real pain today?
The market today was really a tale of two completely different worlds. On one side, you actually had a few bright spots. I'm talking about sectors like metal and energy. They managed to squeak out some gains. But then on the other side, oof, it was a brutal day for sectors like IT and realty. They saw some really sharp drops.
And this chart, wow, it just perfectly shows how wide that gap was. The Nifty IT index absolutely got hammered, plummeting a staggering 4.7%. Now compare that to the day's biggest winner, Nifty Metal, which was up just under 1%. I mean, that is a massive, massive difference in feeling across different parts of the economy. Okay, so that tells us what was moving. But now let's talk about the who. We're going to follow the money and see what the biggest players in the market were actually up to.
So was everybody just hitting the sell button, or was there something more complex going on here? Let's take a look at the data.
And this is where things get really interesting. The foreign institutional investors, or FIIs, they were net sellers. They pulled about 102 crore out of the market. Now that usually signals a bit of caution from the global players. But here's the twist. Look at this. It's a totally different story with the domestic institutional investors, the DIIs. They saw that dip and thought, hey, buying opportunity. They jumped in and bought a net of over 3,100 crore worth of shares. I mean, that is a huge vote of confidence. So what you've got is this classic tug of war, right? Foreign money is kind of cautiously backing away while domestic funds are doubling down. And that opposition, that's what created the market we saw today. Yeah, it was a down day, but there was some serious buying support hiding just beneath the surface.
All right, let's zoom in even further. We've looked at sectors, we've looked at the big investors. Now let's get down to the company level. Because beyond those big trends, there were some absolutely fascinating individual stories playing out. And there were some serious bright spots out there, even with all the red. Take HG Infra, for example. They just won a massive 6-lane road project in Odisha worth over 1,800 crore. Now that is a huge positive for a company on a day like today. Over at the Tata Group, though, things were a bit more complicated. They had a key board meeting, but they actually pushed back a decision on extending the chairman's term. There are reports that this was because of some concerns about losses in a few of their businesses. Now look, the chairman's job is safe until 2027, but this kind of delay, it creates uncertainty. And you know what investors hate? Uncertainty.
And there was plenty of other stuff going on too. Dr. Reddy's got some great news. The US SEC finished a probe, no action planned. RVNL bagged another solid contract, this one from Central Railway. 5 Paisa Capital is looking to raise some cash, and Lupin got a big FDA approval to launch a new drug in the US. So yeah, a real mix of good, bad, and interesting stories out there.
Okay, so we've seen the local picture, but no market is an island. So let's zoom out now to the global stage and see what bigger forces might be rattling the cages. First up, geopolitics. This is still a major headwind. The war in Ukraine is now in its 5th year, with no clear end in sight. And that just creates this persistent global instability that keeps markets on edge.
Then you've got the constant buzz around trade and tariffs. All this talk of new global tariffs is creating a lot of what-ifs about the future of international trade. And if there's one thing investors really, really don't like, it's unpredictability.
And it's not just about governments. It's also about what the companies themselves are doing. Moody's just put out a pretty serious warning about a potential gap in U.S. accounting rules. Basically, they're saying it might be letting big tech hide tens of billions in liabilities from all their AI data centers. And that's the kind of news that can really shake confidence in the entire tech sector.
But look, even on a day that's filled with negative headlines, the most important thing is always to connect the dots, to find the real story, and maybe, just maybe, get a glimpse of what's coming next.
And check this out. This is a really fascinating connection to end on. Remember how we talked about that brutal sell-off in IT stocks? Well, guess what? Today, software stocks actually bounced back.
So why? It looks like they got a little boost from a big AI event held by a company called Anthropic. And the main beam there wasn't about AI replacing people, but about AI partnering and collaborating with companies. Big difference.
So that leaves us with a really important question for the future, doesn't it? As we move forward, could the key to the next big tech rebound not be about the fear of AI replacing everything, but about the massive opportunity of companies partnering with AI to create entirely new kinds of value? Definitely something to think about.